Oil prices have jumped to the highest level in 10 years. While Russia is pushing ahead with its military campaign deep into Ukraine, the US, the EU and their allies are determined to knock down Moscow with severe economic sanctions. The side effect of such efforts is a rally in the whole commodity market. Apart from crude oil, prices of gas, coal, nickel, aluminium, palladium and even wheat are now trading at historic highs. Global stock indices are making losses in parallel. The Dow Jones edged down 0.16% last week. It has been extending a losing streak for 4 weeks in a row. The index opened a new trading week in the red at 32,500 points. Trading sentiment still depends on the geopolitical news from Eastern Europe. The military campaign unleashed by Russia is still underway despite a slew of painful sanctions. The S&P 500 managed not to miss its footing last trading week. This week it's trading lower like the Dow Jones. On early March 8, it briefly touched the level of 4,150, having lost nearly 3%. The catalyst for a mad rally of commodity prices is certainly stocks of energy companies. For example, Exxon Mobil stock zoomed up 9% last week to the strongest level in 2.5 years. The equities are poised to carry on their flight. On the other hand, stocks of most payment system companies, including American multinational financial services corporation Visa, are following a steep downtrend. Its equities plummeted by 7.74% last week to the lowest level in 1.5 years. Both Visa and MasterCard payment giants suspended their online operations in Russia over the weekend. It means that bank cards bearing their logos will be invalid beyond the Russian Federation. Besides, Russian clients will no longer be able to pay with their cards for online shopping and services. It's hard to judge the Russian stock exchange under such conditions. It's currently closed by the Bank of Russia to avoid heavy losses of Russian assets in the face of tough sanctions imposed on the Kremlin for its military operation in Ukraine. The Moscow exchange has been suspended from the World Federation of Exchanges, the main global trade association. The Russian exchange is facing the longest suspension in trading in the country's modern history. Before it happened, Russian stocks were trading at the weakest level in 4.5 years. According to some reports, Russian monetary authorities intend to support the domestic stock market with interventions, injecting up to $10 billion after the Moscow exchange reopens. It could resume trading on March 8. British Petroleum has also joined the wide list of companies quitting their operations in Russia. It's the largest foreign investor in the Russian economy. The company stated that it abandoned its stake on Russian oil giant Rosneft because the sanctions forced Western companies to exit Russia. Stocks of the British energy behemoth have been falling since BP stopped paying dividends by check. Its exit from the Russian market worsened this downtrend despite a stunning rally of oil prices. The FTSE 100, the UK benchmark stock index, slumped by 5.5% last week. Its market quote has approached the lowest mark in 11 months this week. Investors are braced for further inflation acceleration and the most painful crash in returns since 1975, amid the threat of the embargo on Russian gas and oil supplies. The German DAX 40 is also pinned at the lowest level in 1.5 years, having lost 8.19% last week. Investors could be encouraged by the news that the EU would consider the opportunity of the joint issue of bonds to make up for the expenses on energy and defense. You've watched Weekly Financial Review on InstaTV. Please subscribe to our YouTube channel to keep track of all the latest events on financial markets. See you back soon.